And
not seeing that.
that's just the, what S25?
It's so funny when the first few
25
is
does
there
basically is takes 181. It's, they agree
How are
that
you
several
doing with the
of the
contacts?
parts
I've gotten used
have
to
to
it.
go.
Yeah.
Like the 800-foot
I think I would like it. I mean, I ordered 90 of them, so.
Yeah.
some
Oh
of the
well,
stuff
they
on
go
tier 3.
fast.
So the whole, even a person who was behind 181 most, or you know, in the first place,
Contemplated it myself.
finally gave up and said, "Okay, it's got."
Although I don't know, I think I really benefit from not blinding myself.
I think that's
Silly
gonna
things
take
that I
away
do around
our-
my house, so.
Extra protection.
Yeah, it's
Near
like,
term.
you know, you're like.
You got that.
Proof
Just, I mean, I'm,
that
you know,
we were supposed
tree
to have
stuff,
to
walking through the
make
woods,
decisions.
yeah, you know, it's like,
Yeah.
Good.
you know, you take them off and it just like,
Definitely
looks like someone
more.
ran them over with a car. You know, better off.
But the way stuff that
Are all,
happened
it
with the
says
legislature
nine
is,
there. Are all those people on, or are they
well, I
just,
agreed to Microsoft.
is it just sound without?
If their cameras are off,
It's like it also
It won't
they won't show.
there gets it's incapable of coming in from
But if they
Well,
speak, it'll.
Yeah, I was just talking to
Yet
somebody.
they all sit there and say, "We did great stuff."
Yeah, the law of unintended consequences.
We do have the feedback we just received. 39 pages of feedback from who?
From,
David Berkeley. Oh, which, you know, at some point I wouldn't mind having a chat about
just,
some of the stuff.
yeah.
I think I
That's
talked to him about the
test.
finances
That's
more.
old numbers.
Right.
Assumptions.
But I think, you know, he sent an email this afternoon saying,
Yeah, I know, it's not.
which, you know, I'm trying to, he's put a lot of effort into it.
Yeah, I
So,
just think so much was based on the Gray's proposal, which was flawed for a number of reasons.
right.
To extrapolate so much
Right.
from that is,
Well,
you
and
know,
he's
building
come
on a bad foundation with that.
And he's got some, you know, things in there like he's convinced himself that the idea of market rate is, we're huge losers, and it's like, not necessarily, you can't make that assumption.
Right. I think, yeah, I mean, I think especially the next meeting when we talk about financing options, that'll go a long way to figuring it out.
And one thing that I found was,
Two.
Yep, you're good.
So, and I guess if Allison's not coming, then
Ready to go?
we're all
Alright.
here. Are you all set, Jeff? Are you connected?
Oh.
Okay, perfect. So let's open the meeting. I apologize for a bit of a raspy voice, so if you're thinking Lauren Bacall, you'd be right.
That's exactly what I was thinking.
Aren't too many people who can say that to me. Okay, did everyone have a chance to look at the minutes, and were there any corrections?
I'm happy to make a motion to approve the minutes as presented.
Oh, second?
Okay, all in favor say aye.
Aye.
Okay, fine. Before we go to Jeff's presentation, I think we should just take a moment. We have a bunch of board appointments. They're all people who have already served and have agreed to serve again. So there's no need to interview them. I think, and I'm sorry, we need to public comment. We'll do that in a second. Let's just, why don't we just have a motion to approve?
So
everybody is-
highlighted is,
Everybody has already agreed to continue in their role.
great. I'll make a motion to approve
The slate.
the,
As presented.
as presented. Okay, you say that.
Do we have a second?
I'll second that.
Okay, all in favor say aye.
Aye.
Right?
Okay, that's done.
We got one other appointment,
Yeah, the
Well-
communications union, district piece, which is
Oh,
right
right.
after that.
that's the Southern Vermont Communication Union District, that's what, you know, it already put in place fiber optic across all of Benton County. So it's already, you know, kind of did the job, but it continues as an entity to oversee. It partnered with Consolidated Communications to do that. And so the board continues, the governing board continues to oversee. And, you know, we have requirements of audits and all this other stuff. So it's a real municipal entity. And every year you have to re-up the person that's on the CUD. Currently it's me as the representative and Rob as our alternate.
Mhm.
And
So moved.
so yeah,
Seconded.
Okay, all in favor, say aye.
I,
Okay. So now we will open it up to public comment. If there's anybody on the screen, I'm assuming you don't have no public comment.
Shocking.
Okay, no public comment. So then
I
let's.
do, if I just I thought I'd mention that, every once in a while I take a look at the WhatsApp that was created when people were talking about housing. And they've continued to, just to let you know, because you guys probably aren't seeing it and I don't look at it often, but there's not a lot of activity, but things like tonight's meeting, the invite and the agenda were posted up there.
Okay.
And with a suggestion that, hey, people
Show up.
might want to take a look. So that group is still
Active. Yeah.
seeing that things are happening, but I'm a little surprised that we don't get more take up.
We do have some, Ken has raised his hand.
Yep.
Did you have public comment, Ken?
It's a public question. Are the names of those appointments public, or how do we find out who gets on what board? Did I miss that?
It's in the town report, Ken.
Thank you. I'll go there.
Because they're all people who were currently already on the board, so it's just that their term is being continued.
So anybody who showed up is a 2026 expiration of their term.
Thank you very much. Sorry to interrupt. Appreciate it.
Okay. All right, then why don't we, Jeff is here from Community Scale.
Yes,
And he's gonna kind of go through a preview of what they're working on and an update and things for us to ask questions. And so Jeff, why don't you go ahead?
Thank you very much. Let me see. I'm gonna be on the meeting.
Yeah.
Right there.
Should be able to share screen.
All right, it's working. I'm gonna put this over here. Over here.
Closer, that's
Okay.
perfect. Okay, you can get a look at you.
All right, good to see you again.
Good to see
Thank
you.
you,
Come.
Jeff.
Thank you for coming. Very lucky of you. So my name is Jeff Salzer with Community Scale. We were here a couple months ago to conduct some focus groups associated with this project and give you an initial preview of our analysis. So the job today is to give you we're not 100% done, but we're wrapping up. I want to give you an overview of the full report, especially talking through some of the latter sections that really explore some options for the Raptor Lane site in particular, and think about some of what we've learned from our focus groups last time we were here. Have a conversation, and then we can go back and finalize the report, and in particular build out an executive summary that just tells the story in a way that seems to resonate best with our conversation today. So what I want to do is, I've got the full report document up here. We shared some of this before, so I'll just go through the front section kind of quickly just to refresh you. Happy to answer questions to make sure everyone is up to speed, and then we'll slow down as we get into the back of the report. This really works from here, sort of. Okay. All right, so the first portion of the analysis is focused on the housing market, the demographic changes that are shaping, they're changing housing need in Dorset, and then we compare that to what the housing stock looks like, where the market's headed, and that helps us identify where gaps are, where opportunities are to potentially inform the development program here, and also just to inform how we think about housing in Dorset in general. So what we observed with respect to demographic change, age change in particular, was that Dorset is getting younger where the rest of the county and the state are getting older. So it bucks a trend to some degree. We're seeing more families, more kids moving into the area, and older folks representing a smaller share of the population, and in some cases leaving the area. So since 2010, married couples with kids were declining, married couples were declining, and now they're rising. Single parents are declining still. That's a sign that you need to have a couple incomes to make it work in this community. So families with children are still a minority, but a growing share of the population in Dorset, especially since the pandemic. So measuring housing affordability in Dorset, the top line is the typical home price. The dark line in the middle is what you can afford if you earn the local median income. And then the dashed line is what you can afford if you are an elementary school teacher in the area, the typical elementary school teacher wage. So that used to be enough to afford a home pre-pandemic, and now things have changed dramatically, and we're seeing a big separation. So that's, I think, one of the points to explore as we think about programming future housing. To what degree can we try to introduce housing that's a bit more affordable to the local workforce, the people we rely on in our communities, to complement, not to say that we can't have more expensive housing too, but to kind of fill some gaps that we're seeing in the supply there.
Is that the dashed line on the bottom, the elementary school, is that assuming a 2-family income or is that a 1?
That's based on one.
Okay.
Yeah, I mean, when we talk to teachers in particular in various places, often when you start out as a teacher, you're very early in your career. You're probably single at that point, especially as people get married, coupled later and later in life. So, it's true that people are more often than not, eventually putting 2 incomes together. But at a certain stage in your career, when you're getting established in your community, you might need to make it work with a single salary. So one of the interesting things we noticed in Dorset specifically that we don't necessarily see as pronounced in other places is that the local median income is rising very quickly. So that suggests it isn't that everyone in Dorset is now suddenly making more money than they used to. It's that we're seeing some turnover, and people with much higher incomes are moving in very quickly and pushing that median income up. That's what's driving up the housing values as well, housing prices.
Now, is that, from what you're saying, does that tie in a lot to the increase in the percentage of our homes that are second homes?
This is just residents.
Right.
Yeah.
So that's right. Doesn't include.
Yeah. So I'm sure that it's much higher if you. Yeah. So we'll get to the second homes in a second, but yeah, this is the demographics are just
Full time.
according to the U.S. Census anyway. Yeah. So when we explored some of the recent listings in the market. They're somewhat across the board, but more and more very expensive homes, especially in the hills, some of the larger, more secluded locations. The more affordable housing is along the main corridors and some of the historic parts of town, some of the more historic homes. And then we look at rental as well. There's a lot less data here, so I wouldn't consider this a complete picture, but it does tell us that they're scattered around and they're rather expensive. And some of these are houses, some of these are apartments, but generally those are pretty high.
These are regular full-time rental, doesn't include short-term, right?
Correct. So this is based on listings. So our database pulls listings that were placed on a typical listing website. What it doesn't pick up on are more informally listed homes, might be on Craigslist or if you know somebody. But short-term rentals are not part of this. So just comparing the distribution of households that live in Dorset based on their incomes and the cost of listings recently, what we're seeing is a bit of a mismatch where the gold bars, the top of the chart is lower income, the bottom of the chart is higher income, and the gold bars represent the distribution of households across the population, and the blue bars represent the distribution of listings in terms of what incomes they're affordable to. So there's a much higher concentration of recent listings at the extreme high end of the income ladder, and almost nothing really among recent listings that's affordable to many of the households within the town. So there's just a larger share of the population that's being left behind by the existing housing market. So they have a home now, that's great, but if they needed to move around for whatever reason, they're exposed to a much different housing market than they entered in. So the people struggling the most we would call cost burden. So they're spending 30% of their income or more on housing. especially at the lower end. This is pretty common anywhere, but it's particularly extreme here in Dorset, where nearly everyone earning a lower income is cost burden. And so just to compare that to the amount of income restricted units we have, there's 292 households earning below 60% area median income, approximately $60,000, I guess, because the 100% AMI is about 109 or so. So there's nearly 300 households that are earning at that level, and there's 16 units in Dorset that are income restricted, that are guaranteed to only cost what a household earning that amount could afford. So the vast majority are kind of on their own. We can't help everybody necessarily, but that's not that relationship is pretty stark. The number of people who need this kind of housing, the number of people who have access to it. We know that the wait list at Culver Lane is very long. There are people that have lived there since it opened. So desperately in demand for some people. So another perspective is to consider the types of housing we have, set aside price for a little bit, and compare that to the demographic trends we're seeing. Is there an alignment between the size of units, set type of units, and what people need today? And what we see is generally most of the housing is detached single family, and most of the housing is larger 3+ bedroom units, very few 0 to 1 bed units. And as a reminder, vacant in this case is largely picking up those second homes, those houses that don't have a full-time resident in them. So while more units exist in some of these different categories, they're not really available to folks living or working here full-time. We don't have perfect data on short-term rentals in terms of pricing or distribution. We probably still could update this map a little bit, but it shows the distribution generally of where they are, and they're somewhat on the increase, at least according to the yellow bar we saw on the previous map is the yellow region on the chart there. So we're seeing some uptick in the number of second homes. So just increasing competition between full-time residences and the second home market. That's common in Vermont, but it's relatively extreme here. And we haven't been building much. So here's the history of construction over the years, over the decades in Dorset, kind of leveling out pretty close to zero. Another common chart for places like this in Vermont. A lot of places falling behind, not growing much from a construction standpoint. It doesn't help the demand. So if we're thinking about workforce as part of this analysis, these are some typical salaries for occupations we might consider middle wage, middle income, middle class occupations for this region. The 25th and the 75th percentile, I believe, are what's represented by that range. And then what that translates to in terms of an affordable home price if you're only spending up to 30% of your income on housing. So almost none of these typical occupations you might see in your community can afford the typical $708,000 home price in Dorset, with the exception of a senior software developer. And so for people to get to work here, they have to drive increasing distances. People driving across the state line. In some cases, most of the local workforce commutes from outside of Dorset. Some people live and work in Dorset. And remote work complicates this data a little bit. But just anecdotally, too, in Dorset and other parts of Vermont, we hear stories of people traveling further and further and further to find a place they can afford to live and still keep their jobs in a community like this. So at some point, that might become unsustainable for the economy. All right, so those are the key themes from our data analysis. Here, this section summarizes the notes from our focus groups, which were focused. We talked to people in a few different industries representing different perspectives across the town and the economy, and organized it into themes just to help kind of categorize it. I think I won't go through every note today, but it's an interesting compilation of observations that I think are meaningful as we think about Raptor Lane, but also as we think about how the housing market works, what's working well, what's not working well, where are opportunities and challenges for Dorset. So development cost feasibility is one of the most significant issues. We're seeing very high construction costs. People talk about modular and panelized construction, and that can help in some ways, but it's not a panacea. It doesn't drive the prices down too much. We see a lot of costs being dedicated to pre-construction costs, infrastructure costs. There have been the state, and we'll talk about this in a second, the state is changing regulations slowly. So for example, encouraging things like ADUs, but those cost a lot too. So it isn't necessarily fixing things. And then it's hard to justify building smaller units in this market. Generally, the only thing that works is a larger, maybe more luxury home. So we're just not seeing production of those smaller units that are corresponding to some of the smaller households, single workers that we have in our community. So again, there's not great alignment between some of the demand and the housing supply. There are very few rentals. There is an aging population for the people that are able to stay, and not too many options to downsize in Dorset or even around Dorset for people who want to stay in the community as they get older. The second home market continues to create competing demand. There's smaller homes within the village that are not necessarily fully protected from being torn down. So that's some of the naturally occurring affordable housing that we see that might start to continue to vanish over time, maybe be replaced with much more expensive housing. And Culver Lane is doing its job, but it's not enough, at least based on the demand they're seeing there. At the state level, we're seeing there are decades of regulation that have made it harder to build housing in a place like this. That's starting to get undone somewhat. There's a lot of flux right now, so we don't know exactly how things will play out, but there is a recognition that we need more housing in Vermont, of course. So some new programs are coming out. There's some new opportunities that I think will factor into what ultimately happens at Raptor Lane. And one of the key conversations we had with stakeholders, we were trying to understand to what degree does this housing shortage or the high cost of housing impact the ability for employers to attract and retain employees. And some employers are able to add some housing on site. They're getting creative with it. Not everyone is able to do that. Some of the major employers, none of their employees live in Dorset and commute from far away. The school district in particular has a hard time finding teachers. They'll get someone they really like, they'll make an offer, and then it falls through because they can't find housing. And that's something we hear across the country, but it was particularly significant here. And COVID really made this harder. The commute sheds have really expanded since COVID. People needed to go further and further to find a place they can afford. Some employers are exploring automation because they can't staff, so maybe they can use technology to replace some of that. And public transportation in this region is not going to fill the void. People need to drive. Another phenomenon is when there's bad weather, the further people are away, the more disruptive it is because fewer people can't make it to work. So the consequences are compounding with respect to the workforce. A rural place like this is proud of its rural identity, and that can create some tension between the idea of or the need for new construction. And is that going to fit in? Is that going to be too big? Is that going to align with the rural character that we all value here? Just within the market, there's cash buyers, second home buyers that are impossible to compete with for a first-time home buyer. There's perceptions about subsidized housing, affordable housing. People are skeptical of it or concerned that it might not align with the market we have here, or they want to make sure that it's going to look like it's going to fit in. We'll talk about that kind of thing in a minute. Short-term rental properties, many of them are technically suitable for long-term rentals, but it's a different investment premise. You just don't just switch from one to the other. You kind of are in one, that's your business, and it doesn't flip-flop back and forth. And even people who are already housed somewhere are experiencing high property taxes, valuations go up, so increasing pressure on those people. And just the recognition, as we talk to people, employers and others who are maybe don't live in Dorset, but employ people here or have a business here, this is a regional phenomenon. This is not limited to Dorset. Each community has its own specific challenges, but it's all part of the same regional economy. As we saw, the workforce is regional. Many of the macro trends that are driving things locally are really ultimately regional issues. So we can't solve it all together here, just here within Dorset, but there are things we can do. There are a lot of opportunities too to build on. It's not all gloom and doom. I think one important signal that the town is giving the market is that there's a willingness to invest in infrastructure and partnership and land potentially. We've got Culver Lane, which is a well-designed, I think many consider a successful development that's serving its role in the community. Some employers have created some workforce housing on site. So that's a good signal that there's a partnership opportunity there. The employers aren't just saying, take care of this all by yourself. They're contributing as well. And more generally, stakeholders we're here talking about this as a community. So that's important. Some places might be putting their head in the sand, but this community is talking about it. We have a strong market. The schools, for example, are a powerful draw, unique to Dorset compared to other parts of the state. And when we talked to realtors, they felt like there was a way to add new development and it wouldn't necessarily impact property values negatively, especially if it's well done. If we're considered about it, we do it, we design it right. And I think that there could be support for condos, for apartments, for multifamily, but again, it just needs to be done thoughtfully and with recognition to what the community values. It can't feel like it's just coming out of nowhere or being shoved from the top down. So I think there are pathways to have that conversation and get there with this community from what we've heard and seen. So I believe we shared this too, so I'll just go through this, the market demand piece. In addition to looking at the data specific to Dorset and talking to the stakeholders here, we also wanted to take a more objective view of what's driving the regional market. In this case, just measuring where people are moving within the region, what their incomes are, what their housing choices are, to get a measurement of what would likely absorb, what would the market be interested in and pay for if it existed within the market, as another input to the analysis. So for that, we consider the market study area, in this case, a 45-minute drive around Dorset. So it's extending, you can see the map there, down to Bennington, and then up, not as far as Rutland. So it's about as far as you can get, 45 minutes, Dorset at the middle. And so I'll just summarize what we're looking at with these charts. What we're thinking about is who's currently moving into that region that we just drew, who's moving out of that region that we just drew on an annual basis, what type of housing are they looking for, what is their income, what can they afford, and what bedroom sizes, what tenure, so rental ownership, what would they be looking for? So we can understand what the pools of possible demand are within the region that we could draw from to fill units that we would build here in Dorset. And so some of the themes that also were reflective of some of the demographic changes we're seeing, generally, when we're comparing the people that are moving into the region from outside with the people that are already here, the people moving in tend to have higher incomes than the people that are moving within the region, so increased competition from higher earning people. The people that are moving into the region tend to have larger household sizes than the people within the region. So the people within the region are looking for smaller units, the people coming into the region are looking for larger units. So they're absorbing a lot of those bigger houses. We don't have enough of the smaller units to satisfy the demand of the people that are here moving around. And so there's also, if we were to look at demand for rental housing, the demand is highest among people moving within the region. So people moving into the region tend to purchase their homes. The people moving within the region are trying to find a rental. So if we're thinking about what types of units would serve the people that already live in the region, we would need a higher ratio of rentals than if we were just trying to serve people entering the region for the first time. And then across the board, people moving from outside the region are of course willing to pay more, especially for larger units, but they don't have quite the demand for the smaller units. So if we built smaller units, there's a higher chance that the people moving into those smaller units would be local people from the region already. So we tabulate the annual demand. So this is just all the people in those different demand pools, all the people moving into the region, moving within the region, all the people in this region, they're looking for a new housing unit on an annual basis. This is an estimated distribution of what they can afford to pay on a monthly basis. There's a bit of a translator at the bottom between rent and what that would translate to for a sale price for a house, and then what the number of bedrooms are they'd be looking for. And this includes people who are cost burdened, or there's a high concentration at the lower price points. And this isn't to say that this is the menu we need to build exactly, but it's to help us understand if we were to build this size unit at this price point, this is the magnitude of demand we could expect. It's a little skewed by what exists and doesn't exist in the region. So our sense is that because there aren't that many 0 to 1 bedroom units in the region, you're not seeing quite the demand that we might expect for those units. And also as households trend smaller, we'll see growing demand over time. But still, this gives you a sense of how much people are willing to pay and generally what types of units, what size units they're looking for in the region. Okay, so the last piece of the presentation, we're thinking about Raptor Lane site specifically, and because there's a lot of moving pieces here. There's a lot of variables we haven't that haven't been fully fleshed out yet. The goal is to provide a way of thinking about this that presents a few different options and variables that we can talk about, primarily to understand what the trade-offs are between them. Like if you dial this up, if you dial that down, what does that leave you with? Just how can we think about this in a systematic way to understand what different options are actually available to us and what the implications are in terms of the types of units we could get, the absorption we could get, how much public subsidy we might need, how much TIF we could create. So those are some of the comparisons we'll make. The ingredients to the development scenarios that we tested were, there were two types. One is the idea of selling single family lots. So we ran this a few times, and what we found was it was really, the initial idea when we were here last time was maybe we can program this so we have some of the units at a higher price point and some of the units at a lower price point, and we, so to speak, make money on the more expensive ones to transfer that to subsidize, cross-subsidize the cost of the lower cost ones so that we can achieve lower price points for at least a share of the units. And what we found was when you look at the construction costs, $420, $450 a square foot, it just does not, it's no surprise that we're not seeing 1 and 2 bedroom units and studios getting built. You just can't make it work. You really need to build a large, expensive house at those price points. And you need to be building $1 and $2 million homes to try to get some cross-subsidy fuel to help subsidize those lower cost units. So something that had come out in our focus groups, an alternative approach was to take some of the land in this, in the Raptor Lane site and sell it off as single family lots, connect them to roadways, water, sewer, utilities. They could be an acre or larger. We have to calibrate exactly what the right size is. But the idea is those would generate a significant amount of revenue that could then allow you to build the other types of units at a more approachable price point, getting at that middle wage, middle income sweet spot that the data suggests we really have a shortage of. So that's what single family lots refers to. The other typology is single family cottages. So these are just very small 2 and 3 bedroom homes. So some 3 bedrooms potentially for families, for example. But otherwise looking at relatively small 2 bedroom duplexes, 2 bedroom townhomes, 1 bedroom rental apartments. So the 3 in the middle would be ownership, and then the apartments could be rental. And so what we're solving for as we run through these, we did 3 scenarios, but we'll show you we can do more, is are we creating units that are attainable to middle income workers? So are we able to hit price points that are below 120% AMI or affordable to $130,000 income? Are we adding units that are needed, that we've identified as underrepresented, especially to serve the people that are already living and working here or in the region? Are the price points within reason? How optimistic are we trying to be? Do we think we could realistically sell this number of units at these price points? I think there'd probably be some phasing that would need to happen depending on the scale. We have 3 different scales of development. And then just thinking about the balance between the near-term benefits and costs to the town. So how much would need to get paid up front? What's the grand list impact? How much could we possibly bond or TIF? And we can feel comfortable with that balance. So we made a calculator here. This is a screenshot, and I'll show you some screenshots of different scenarios. This is something we can go back and continue to play with. The idea being, this conversation won't end tonight. It won't end when we submit our final report. This is something that you guys could use to continue to have this conversation. Just a way of structuring it and modeling different options, different scenarios, different numbers of units, different price points and sizes, and it helps you organize your thoughts and see what that bottom line starts to look like. A few things that we did not model that will also invariably be on the table are things like federal tax credits. So, for example, we thought about all these just in terms of the relationship between the price and what it costs to build it, and that's about it. But there are, of course, tax credit programs that might factor in that could either make some of this cheaper to build or help get income requirements lower. The actual value of a TIF or a bond to be determined. So we just estimated what that could be. Other support from the state could come in different forms that could help support this project at the front end or later. And then partnerships that could emerge. For example, if you were to partner with a nonprofit developer for part of this, you might be able to dial down some of the costs because the profit requirement might be lower. So there are a few more levers to pull, but we wanted to get the ball rolling with the basics. So we tested 3 options, a 30 unit, a 60 unit, and a 90 unit option. And we rated each according to those metrics that I talked about a second ago. So you see the 5 different unit types. We've got the square footage indicated, the price per unit indicated, and the total number of units. And so the return per unit is one thing to look at. So the single family lots, of course, we were suggesting that they could sell for $300,000. You might put about 100 into it to get it connected to the infrastructure, and then there's some transaction costs. So trying to be conservative with some of these, maybe you could get $180,000 or so for each of those. So that can help subsidize some of the other units. And then otherwise, for the other 4, we tried to calibrate the prices and then the rents on the apartments to be affordable to somewhere between about 80 and 120% AMI. And in some cases, try to get that to more or less break even. In other cases, there's a bit of a deficit, at least up front, but then there's also that tax revenue number, which over time can compound to support a TIF or a bond, or just pay back into the town coffers over time to offset investments that the town makes up front. So this example suggests that you could get 30 units, 2/3 of them could be affordable to 120% AMI. So that's much higher than traditional affordable is 60% AMI. That's what a tax credit would be. In this case, we're considering it middle income to be up to 120. You're achieving many smaller units that you didn't have before. You probably could get this done in one phase. It's not that many units. We do have some. They're not exactly in the sweet spot of the market, but many of these are. If you think back to that table we had, there's some market strength behind these price points and these unit sizes, but you're not generating a ton of tax value to complement the intangible benefits. We assumed also that the land cost was 0 in this case, so the town would be contributing the land. So that's another variable. There's a place to adjust that in the calculator if that were not acceptable or you wanted to try other options. But it's not uncommon for a contribution of land to be part of the deal.
Couple of questions on this. So can you just explain why the cottages duplex are a negative return?
Yeah, because it costs more than. I didn't put the cost on. So each of these has a tab in this calculator to break it down further. But the reason is it costs more than we're selling them for to build them.
Okay. And that would be presumably made up.
So the price per unit plus the return number,
Effectively, yeah.
the reciprocal, whatever. Yeah.
So that factors in just the hard costs, the soft costs, the transaction costs, the profit if it were a developer. So just the total development cost and the sale cost drives that number.
But that ends up, it does show that like the townhomes are clearly the much more affordable. So look at, $450 price per unit, that being 117 negative.
Yeah, we made those a bit smaller.
And then with the single family lots, the idea we would sell those for $300,000, but then the cost to build the home would be on whoever buys it.
That's right. That was the idea. We initially tried to model it as if we were taking into account the cost to build the home too, and it needed to cost. It just wasn't making any sense. It didn't seem like the town would want to speculatively develop $1.5 million homes.
Right.
You also can't sell $800,000 1,000 square foot home. I mean, just the numbers weren't adding up, and so we thought, you know what? I bet there are people. I mean, we know there's a market for lots, and you can make them particularly attractive by connecting them to the infrastructure that you have here. So those, you know, we could talk about what would depend on the layout, but how big do those want to be? Can you get more or less for those? But that felt like a pretty promising source of some revenue.
But they could also be a way to, if you had 10 of those, and a portion of that 300 were, you know, it's when you look at what you're having to spend to build the infrastructure, it essentially spreads those costs over, you know, as you said, you could, you know, you're putting a sell it for 300 and you're assuming that, you know, over, you know, you end up saying 118,000 is cost associated with that.
Right.
That could be 118 allocated to the infrastructure build out. So you're essentially spreading the infrastructure costs over more units,
Potentially, yeah.
which, because if we just built 20 affordable, then, yeah, anyway, I think it's a benefit to the infrastructure costs to build out potentially.
Exactly, yeah.
So the sale of the lots is predicated on the existence of infrastructure that we paid for.
Yeah,
Okay.
you would need for the rest of the development too.
So we need to price out what the infrastructure cost is overall to be a part of this analysis.
And we don't know, yeah, so I think we put the TIF value, one just approximate way of figuring that out is to take the tax revenue times 12, that's a kind of a rule of thumb, but so here you might have $2 million of TIF value to help finance the infrastructure that's needed. This is not assuming that townhome gets all the infrastructure necessary for it. It might assume it gets, you know, it can plug itself into the infrastructure, but there's going to be some broader build out that you'll need those $2 million to cover and or other types of support.
That's what I figured. We just have, you know, that's a cost of, you know, in order to do anything, we need to have the infrastructure taken care of. So.
Correct.
And if you've committed the town money and the tip money and the chip money toward infrastructure, does that leave you any money to produce affordable units, assuming that the units have to be subsidized?
I think that's what the land does. The south sale of the land.
That there's enough in those pots to do both those things?
It hasn't even factored in. I mean, if you go back to one slide, it hasn't factored in any partnerships with any other entities, any tax credits. It hasn't factored in any of those other.
But the total cost of the infrastructure, an estimate on that, that's what we're trying to do with Edmund Kessler, right?
We're trying to find out what that is. Yeah.
To get an idea. Until we know that, we can't know how much we need to.
Too many variables.
But in this case, it's the 1.456 million that the sale of the land generates to make all the other homes more economical.
Right. This one is the cleanest as they get. Well, I'll go to the other two so you can just see what happens as we start scaling it up. Here's a 60 unit scenario. So here, I mean, every time you scale it up, if you can disproportionately add things that are not single family lots, you start to get more and more higher rate of lower cost units. So here we're getting 46 of them. We're getting more tax value, but we're a little bit underwater overall just in the math from the units themselves. I mean, so we looked at and examined, there are all sorts of ways to fill that gap, so that didn't feel excessively underwater. But you do start to get to a point where it isn't just breaking even between the single family lots and all the other units. We need to decide how many of those lots we can really fit. They need to be in the right location. I think one benefit is they'll be attractive because to people who are interested in being part of having access to other services, having access to the trails. I mean, it's a unique site, but we'd have to lay it out to make sure we can get as many as we need to make the rest of it work.
So the single family lots would not be designed to help the missing middle or the workforce housing.
No,
Those are just,
I think that's
unlikely, let's put it that way.
right, so you're spending 300,000, then you have to build a house. You're at $1 million, maybe knock off 100,000 because you're not building water, sewer, and power's already there.
Right.
But that's not,
That's a philosophical.
yeah, no, I just wanna make
Yes.
sure I was understanding
Yes.
how it's being driven.
No, but you know, it's a buildable lot in Dorset.
Right. In an attractive
So
location.
it's always gonna have some, you know, value.
Yeah.
Yeah, we've run this by some local real estate folks and modified the numbers a little bit. I mean, you know, we did our own market analysis, but this also needs to pass the smell test from other stakeholders as well. So we're feeling pretty good about the price points, the single family lot concept. If you get the lots the right size and in the right location, I think that can work too.
Jeff, how do you figure out, you know, like obviously like here we're saying, you know, 14 lots. Those 14 lots aren't all gonna sell at one time. That could be selling like over years. Like how do you figure out that sort of absorption rate? Like if it gets less expensive with more units, but then those units, there's maybe not the demand right at that moment. Like how does that,
Yeah,
how do you determine that?
that table that I had before. I mean, what we do is look at just what is the magnitude of demand overall for units at different price points on an annual basis in the region.
Right.
And what share of that total demand could Dorset attract? And it is a bit of an if you build it, they will come scenario.
Mhm.
And I mean, we're talking, there's 5,000 units influx on an annual basis within what we would consider the market area. So if you're just adding 30 to the mix, that's not a very large number. And then we tried to dial the price points down to areas within that matrix that had a decent amount of power behind them. It wasn't, you need to find that one person that's willing to pay that this year, you're gonna have to wait another year. The lot, so I think, I mean, these numbers feel reasonable to us.
Mhm.
But you know, when we decide how to phase it, you might do a little bit more market research locally. It was suggested, you know, just get some applications or get some potential listings. You know, there are other ways to test the market in real time when we get closer to actually opening this up. But based on our initial evaluation, these felt like reasonable numbers. And if we need to phase it, we can also.
Yeah.
Well, that's, you know, Rob, we know what, you know, we have several neighborhoods that have been built in the past 25 years, right? You know,
Mhm.
and how long is it? You know, those are probably, you know, bigger than 10 or 14 units, or in that ballpark. Now how they tended to be
Sell
developed. What's that?
How have they sold out?
Yeah, just
How
curious.
How
fast?
much time?
Yeah, it's a good question. I mean, I think.
I mean, Owl's Head and stuff like your.
Yeah, both Black Rock and Owl's Head have, you know, more, you know, similar number of units or more. But it's a, you know, single families on 3 acres. It's a
Right.
general
So it's a different.
development trend. So that, you know, it's different than having a site with, you know, common water and sewer, which is
And maybe just an acre or
which
something.
will impact probably the upscaling of things.
Yeah.
Whereas, you know, the natural progression of, you know, single families on larger lots may be a little slower without the infrastructure. I'm just making that kind of assumption.
Yeah.
With the infrastructure
We're
there.
apples and oranges though, so we
A
can.
little bit,
Yeah,
yes,
yeah,
because
okay.
there's unique infrastructure costs related to single families on large lots. Like they all have to be cleared, they all need their own well, they all need their own septic.
Right.
Whereas you know, some of the, you know, that would be provided here to a certain degree, which would lower the entry, you know, the entry costs for whoever is going to
And one thing that is,
participate.
the way the state wastewater rules work that would be attractive to this is that once you have a common wastewater system that's of a certain size, you no longer count bedrooms. It's per house. So you could say,
Really?
this house is approved for this lot. And you could say it's 5, you could make it a 5-bedroom or a 6-bedroom. Act 250 will chime in there with other issues, but as far as wastewater goes, you're not just saying there's a 3-bedroom septic. It could be 3 to 6 or whatever that buyer
Stuff
might
can move
want.
around, yeah.
So it's, you know, there's a lot more value there.
And tall.
You know, it's a whole economy of scale, right?
Here was an intent to get 90 units. Maybe this is over 3 phases. So if you think about it as 3 phases, it's just the same 30 units 3 times. It's just as would be just as easy to absorb. The only caveat is you might need to build out more infrastructure up front, potentially, depending on whether or not you can't always phase every component of the infrastructure that we need to get figured out. But in this case, we're getting over 80% of the new units are below 120% AMI. Potentially, this is 16 single-family lots, so that maybe could be higher, maybe not, but the one that just makes up the top end for now. And so we're counting that against the total development yield of the site. We're not saying those are something separate. And here, the 28 apartments, maybe across at least a couple buildings potentially. You could do the cottages, duplexes, and townhomes and phases as well. So it's to some degree just a proportional increase across the board, bigger tax return to work with also, TIF or bond that. I know that, so we felt this is not to say these are what they have to be, but could 90 units work from a financial perspective? This is what it could look like. And again, we, getting into actual layouts and designs, we can play this out some more. There are some couple of case studies. So this is one we looked at, Stonecrop Meadows in Middlebury, if you guys are familiar with this project. So this one is technically a 254 unit development, but they're doing about 80 or so in the first round. They're striving for much deeper affordability. So they want 34 of the units to be affordable below 80% AMI. And they're building much larger units too. And they have many, many millions of dollars of support from college, from the state. And so what we sketched out doesn't necessarily require that you obtain many, many millions of dollars. I think it seems practical to me to have a plan that isn't completely predicated on an extraordinary amount of subsidy. If you can get it, that's great, but you have a path that's maybe approachable and reasonable in case not everything you can imagine comes through. This is unique in that Middlebury College was really helping get it off the ground, doing whatever it took, buying the land. So that they're really helping spearhead this first phase. But you don't need that much support if you're not trying to get units that are at this subsidy level, and also, a 2,500 square foot townhome. I don't know if that's exactly what Dorset needs more of. We were thinking about much smaller units, fewer bedrooms, lower square footage, and you can make those work with good design. There are a couple other questions that came up, I think, in our discussion in this room, and also when we spoke with our focus group that we wanted to address. One of them is just the question of whether or not, if Dorset is a generally high value real estate market, what's going to happen if lower cost subsidized, or formally subsidized, informally subsidized, whatever it might be, if we get a mixed income housing development, is that going to negatively impact property values in the immediate vicinity, in the broader market, or not? We happen to be doing a statewide study on that question for New Hampshire housing right now. So we haven't finished it yet, but I was able to bring some initial results from our economist. And we've done 3 types of analysis of the same complete data set, all of the transactions over many years across the state, thinking about what happened to property values just before and just after affordable subsidized housing, in that case, all just straight up, tax credit, formally subsidized housing was built. But we found that there was not a negative impact. Generally, the initial takeaway is there's not a negative impact. The relationship between the presence of new affordable housing and the property values around it was not statistically significant. And that's a whole state's worth of data. So we feel pretty confident that at least from a quantitative standpoint, there is no real relationship. I mean, anecdotally, in some locations, adding millions of dollars of investment is good for the neighborhood, for property values. That's what we might see in an urban environment. That's not what we're working with here, which is why the New Hampshire study is particularly relevant. There's a lot of rural properties in that mix. So I think we can say, from an academic standpoint, that there's not a detrimental impact on property values from mixed income housing. That said, you still need to do it right. Another question people had was, if this is mixed income, are people willing to pay market rate prices to live in a mixed income community? So what we did not do, the concepts we showed you suggested that you might have, there's maybe a village area where most of those units are, where the cottages and the townhomes and the duplexes are. And then the single family lots that would be the market rate units are wherever they end up being. So in reality, everyone who's living within the village in those scenarios is kind of on the same plane in terms of what they're paying. But you could sprinkle in some higher cost units as well. That would be more of a truly mixed income scenario. And so just in our research about whether or not the presence of lower income or subsidized units can draw down the market value, the prices you can get from the market rate units that you're depending on to make the numbers work, we found that you can avoid a negative relationship with the right conditions. So for example, you have very strong demand already. It's not like you're trying to twist someone's arm to live in Dorset. There's some communities where there isn't a strong demand already, and now you're making it more challenging because in this case, people are going to want to live here already, so they're motivated to begin with. If you design it right, then there's what you don't want to have is a subsidized building or an affordable building looking cheaper than the other building. So you need to have some level of design parity just from an exterior perspective. And then also the interiors, just make all the units to the same design standard. And then there's no visual disparity between the units, and everybody feels like they're living in a community that's held to the same standard. You could add market rate units. I think because we're at those middle income, we're not talking about 60% AMI, 40 or 30% AMI. I don't think that's quite as meaningful here. But making sure that it isn't all very low income can help with property management, and then having the amenities as well is really important. So designing a community that has, you can't go crazy because that'll drive costs up again, but what we have are great trails. So just you can go hiking, you can go biking, you're in an amenitized community. Just make sure that the landscaping is really well done, and then whatever the price points might be, that it's not a liability to people's desire to live there. Okay, that's it. So
Cool.
Yeah.
So I can go back to anything you want to see. I'd be curious if you'd like to modify the scenarios, if you think the storyline is missing anything as we wrap this up and put the executive summary together. Just any last things we can look at for you.
I have some questions if it's time for that.
It's Rosalie.
Yeah, we'll take a question, Rosalie. I mean, right now, because he's going to be presenting at a separate meeting to the town where everyone can ask lots of questions. Right now, we're trying to get the select board to sort of focus on the presentation.
I believe I'll be out of town that date. What is that date, please?
May 20th?
May 20th. I might have just come out of surgery that date, but I'll make a note of it. I have a bunch of comments and questions, and is the best thing, if I can't come to that meeting, to send it to you, Megan?
I think that's fine, Rosalie.
Okay, thank you.
All
right.
If there's one particular question you want to ask, go ahead, Rosalie. We want the select board to be able to respond to this so that we can see if there's anything more we need to do for the presentation.
Okay, well, there is one page that went over very quickly, and if we could go back to page 23. It was a reference to downsizing, and it went so quickly, I don't know what it said. I think, Jeff, you might have mentioned no downsizing options. Okay. The second bullet point is something that is one of my main points, and I will make that statement in my comments, but I see a natural synergy between younger families moving in, wanting homes, and seniors who've been in our community for decades needing to downsize. So my inclination, not being a housing expert or anything, is that I'd like to see the whole Raptor Lane focus to more downsizing for senior opportunities. So I'll put my comments in an email to you, Megan.
Okay, that's perfect. Thank you, Rosalie.
Thank you.
To that point, we did think about the square footages and the sizes of many of those units. I think those duplexes, those could be single level, the cottages. So you'd want to, we could add that point, I think, more explicitly. You want to make at least a good share of those units single level, accessible, the type of unit you want to downsize to.
One of the things that jumped out at me on one of your very first slides about had the yellow blocks, and it was the lowest income group. It was 80 units, but 25% of the current seniors fall into that because I've
28% of the town.
Yeah,
one of the
yeah.
comments we've heard from some people
80
is, well,
households.
if you're building these, you're just, it's why do rich people living in Dorset need help with a downsized home? So I was surprised to see how much of our 80 senior households would fall into that low range, and that there would be a real demand for that could go to people who do need it.
Yeah.
Anyway, that jumped out at me.
And they might not have a high income, but that's because they're on a fixed income, but they own a very valuable piece of real estate probably.
Correct.
Which they can
And
trade for.
they can't go anywhere else.
Right,
Unless they leave the community.
so they sell, they get a profit, which might look like a lot, but if that's all they have to live off of
Yeah.
for the next 10, 15 years, then, they qualify for that. One of the things I was gonna ask Jeff, and I'm not sure, with a lot of these things, when we're talking about trying to lower the price, because I know, when we spoke and you were kind of doing everything in real time, like changing different numbers and stuff, and we could see what it actually cost to build these buildings, which was crazy. So they're all sort of being offered for a lesser price. How do we control who's buying that so that it's not one of those families that's coming in gonna buy it as an investment property or something else? And are those, like when we're doing that, are there income guidelines, or is that through deed restrictions and things like that?
Yeah, I think deed restrictions is one option. You would maybe need a partner that can help manage that.
Mhm.
There's, I guess what would be here in
Cornerstone.
Marston, yeah. So that would be an example.
That again would be like Culver.
Yeah.
Right. It's important to point out too that the CHIP program has its own unique kind of requirements. So if it's utilized, there's requirements for utilizing the program.
Yeah, some of them got a little tough in that, like for CHIP, they said everything has to be a
Primary household.
and it's like, how do you
How do you
ensure
police that?
Yeah, which goes back to the having an entity that manages it.
Yeah. And also to Frank's point is that when people are saying, oh, it's gonna be the people with lots of money that are gonna buy it and downsize, it's like, no, the idea here would be that it would be controlled so that it would be for people who need the housing, that there would not be someone who's just trying to.
So conceptually, you've got the lots being sold, generating, a nice cash bucket that then goes to subsidize, let's say, the other housing. But who is managing that? Where does that money go? Is that the town holding that money, or have you gone to the next step of thinking about what's the best way to manage that?
All depends on how you develop it,
I think
what partners you have, what agreements you have.
I would think we tend to want to have
all that stuff.
somebody else under an agreement. So we don't actually hold. I don't think we want to be in the position of being a direct holder of,
It gets into the the implementation piece, which is kind of a
if the
different.
partner
this is-
needs to follow a set of
Yeah.
pre-agreed.
This is theoretical, and it shows that with these certain parameters, it looks more feasible or less feasible, which I think is what
Right.
we're all trying to
Right.
wrap our heads around.
Like, could this be where a housing trust took a role?
That could work.
Or a nonprofit partner, or both a nonprofit partner and a private developer together could serve all those roles. There could be certain aspects of parts of it that are certain one entity does, another entity does, but there's an agreement between the
But it all
the
goes back
three to
to,
do all of this stuff.
I mean, the town, because we have the land, which we're willing to give, and we're willing to put something into infrastructure, that's what
Right.
buys us our ability to dictate some terms.
I was curious if Jeffrey, maybe with everything else you see in New Hampshire, Vermont, Massachusetts, whether you've seen any other interesting
Yeah.
collaborations that function well.
I think you could have a master developer. I think what you would do is have a master developer that takes everything on and then partners depending on how you want to carve it up. And there isn't one entity that does all these things all by themselves. That you could either partner with private or nonprofit developer to manage the whole thing. You work with the land trust or with someone like Cornerstone. I think you kind of can do whatever. There's an option for every scenario. I think what we were hoping to discern is what are the parameters that the town has an appetite for,
Right.
and then we can put that together. So one thing we could do is just give you a bit more notes on if you guys are comfortable with some of these parameters. What would some of those moving pieces be on the implementation side? Not to get ahead of ourselves and design it completely, but what is, who would need to be at the table to cover each of those pieces, and what would their expectation be? How do they work together?
Yeah, well, let's wait till we get through your presentation next month and then.
Okay, so do you think it's helpful to have an answer to your question that's
But actually having sort of just an intro to the answer would be probably useful, don't you think? You know,
Sure. I mean, it would be done with
explaining who the parties might be.
development agreements.
I think that'd be helpful, because
Because people are gonna have questions, you
to
know.
that and how you police who owns it.
Right. One of
Because
the
we've been hearing a lot of that.
Well, one of the toughest things I've found
It's
is
also
that
important
a lot
to-
of people have been assuming that the town is taking a central role in running everything, and it's like, that's not the town's role. And
Yeah. And we don't have any infrastructure. So that's kind of, and I think that it's important to call that out because it's easy to get, well, who's doing it? When are they gonna be available? We're jumping to the end and we don't even have the
Right.
kind of critical pieces to even
Right.
have the discussion.
But once
So-
we know, we have an idea of, what the land could be worth, and then we're getting a better idea of what the infrastructure would
Yeah.
cost.
Once,
And from the town's perspective, it's if we're gonna support something like this, I think, one of the key elements is where I think a lot of people in the community get nervous is they think that, it's like we have the session coming up on funding. And so, on that WhatsApp thing, there were some people like, well, what the heck are we funding? Why are we borrowing money? And it's like, they assume it's something different than we're playing a facilitator role and attempting to do that with no real burden on, current property tax rates and stuff like that of members of the community.
Yep.
We don't want to have the town having downside risk associated with a development. We don't want the town, townspeople having your taxes are going to go up 25% because the project's not going well. We're trying to avoid those things, but if we can support building something like this without putting that kind of burden on the,
yeah, and I think
we're helping the community.
one of the, at least for this process, for me, one of the kind of watershed moments is the identification of the hypothetical market rate values of what you're going to sell stuff for, taking that and just going and kind of putting it to the side because there's so many different crazy variables, and it's hard to have that not distract what is feasible under certain fairly simplistic pretenses, which is the sale of the lots, et cetera.
But to me, having some of this data is so helpful just because it's been so nebulous, and
Yeah,
start
you're getting
to get a
puzzle,
little bit more of a handle on,
all the puzzle pieces.
yeah.
The one thing that I think might be useful when you're doing your presentation, the slides, and guys can tell me if you think I'm wrong, but I know when we were looking at when we were having our meeting earlier, I think it could be useful just to show people what the what the raw fair market value cost is, building cost is of those units before, instead of showing what we're offering it for, say, this is the reality that makes your eyes pop out. Like, this is what it would actually cost to build this little structure. I think it's helpful for people to see that before we move into the section about, showing what we're wanting to offer it at, because it's, it just kind of, it
I think
kind of sets you in the place, like, this is why it's so expensive.
Yeah, there's a bit of a mentality shift too, because it's easy to go, wow, just add an extra 300 or 400 square feet and it'll look, 1,200, 1,300, that's better. But when you start to factor that stuff into the matrix,
Right.
It gets unwieldy really quick.
Blows up really fast. Yeah, if you want to have those price points, yeah, exactly. So we could, maybe when we introduce the different typologies, talk about what they, maybe it's here, like, to build 1,000 square foot house,
This is
$700,000.
for
That's what it would have to sell for.
$450. This is what it would sell for, right?
We would have, and to frame it as this is what it would have to sell for to even justify.
Correct.
That's a total difference. It's not like this is how much you could make. It's like you can lose money unless you sell it.
Yeah, and that's where the market rate scenario starts to get.
It just wasn't feeling credible.
It's
Right, exactly.
Okay. You put it on a spreadsheet and it kind of pops out at you.
Yeah. So
And again, what was really useful when Jeff was here before is that when he gets this calculator thing set up in real time without the algorithms in there, you can just adjust something. Like Henry wanted to see like a bigger unit. It's like, that's too small. And then all of a sudden all the numbers just explode.
Yeah.
And you realize like, wow, okay, that's why, that's the way it is. And it's just helpful because then when everybody's going, well, maybe we should have more of this or less of that.
And then maybe this is something that you could, if you're comfortable with it, Jeff, maybe there's a way to get this into a format to where the unit count and maybe the square footage piece can be manipulated by whoever, right? And then it populates the rest of the stuff so people can kind of see what we're up against. Just a thought.
yeah.
Almost like a
An
calculator.
unlock spreadsheet.
Like a
You should be
calculator.
able to do that, just change.
One of the things that
Partially unlocked spreadsheet.
Yeah, without messing up all the formulas.
Yeah. We're thinking, there's gonna be a survey at some point of the community. And, people that are willing to, spend the time to see this, to maybe better ascertain what type of scenarios they have in their head and how it would kind of play out or wouldn't play out. Might be something that could be useful to us.
We're perfect. We designed this thinking it would be helpful in that way.
Yep.
So it's set up so it's not too hard. You
Yeah.
change the yellow things, everything else changes.
Mhm.
You can go to the different tabs and see what's happening. I can pull it up right now if you're interested, or share it next time, or but and then if
So it
something
can be fun actually to send us a copy of one with so we can play around with it.
Yeah.
Send it to Rob and we can share it.
Sure, there you go. Alright. And importantly, there's assumptions baked into each of the tabs, and particularly in the assumptions tab, because things are going to continue changing too. You're not going to figure this out tomorrow and hit go. The prices are going to go up even more. Other things might change. So you can at least keep up and talk to the people in the community in the real estate market to see what they're seeing most recently. That can help refresh the assumptions.
Yeah.
But I agree that the unit size in particular isn't trivial.
Right.
And so you have to have an approach to making that work. It's not unreasonable to have a 950 square foot 3-bedroom cottage if you design it properly. You need to design it really well to make that work.
And at the same time, the idea of using off-site construction and all, that's probably not going to change the numbers dramatically.
It depends. I mean, it doesn't change them dramatically, no, from what we've heard. And if you're doing modular construction, and modular doesn't mean, there's manufactured housing, which is maybe it comes in on a truck. Modular is that the components are pre-built, panelized, and it's put together, and you can save on how long.
Vermont, there's a company, there are companies here that are doing that now.
Yeah, Vermont, New York, there's a lot of places, and you save on one end, but you can pay more on another end.
Right, it's
It
still
goes
not
together faster.
inexpensive.
It's not gonna change, it's
still
not
need
gonna
all
change
the
things dramatically.
Infrastructure and everything put in,
Well,
not
I mean,
wastewater,
Yep.
but I mean, you have
Yep.
to have plumbers and electricians
At
and all that.
scale, it might help a little bit, right? I mean, there's probably some percentage that you shed by
It's also
incorporating goods of that.
it's nice quality. A lot of it's not bad building a house inside a warehouse. A little better than getting snowed on.
From a rollout phasing time consumption time frame, that's it can be a significant difference between that mode versus stick built.
It helps you avoid some of the fluctuation and volatility in the labor market too. You're competing for carpenters that would rather work on the multi-million-dollar home. So can you build 30 units at a time? You have the people around to be able to do that. The other thing is a modular unit is likely to be can be tighter, more energy efficient. So you also have to think about the cost of living in these units. It helps for it to be smaller. The tighter the unit, the more someone on a fixed income can afford to stay there, and utility costs don't get out of control. That's probably a liability in their old drafty house they're in right now.
So can we just go back a second to what you're saying about market rate housing? So when you looked at it, you found that, whoever the developer is, if they're building this, that it doesn't make sense for them to be building market rate housing? And that's why you went to the selling of the single family home concept, is that?
We assumed that there was a desire to have moderate cost units and smaller units to fill the gap in the market. So you could build much larger, much more expensive units, and maybe that could work from a market rate standpoint. Might be more straightforward. You just list the land and say we have this land for sale.
Right.
And just build whatever you want on it. But if you're trying to target something specific, then you need to be more deliberate about how you. And the market's not going to give you these little units at a price point that's
affordable.
Anywhere. And affordable means $130,000 a year. So that's not low income, but it's within the range of what more people make who live and work here than not.
Kind of on that with the single family lots. What I had been assuming, and I'd made bold statements that I had no basis for in the past, like the idea that like there are some senior downsizing sort of things in our community, Equinox and Battenkill. It's a really attractive community, and those sell like hotcakes, and they tend to be duplex sort of units, but very nicely done, nicely landscaped, really nice community.
And we could sell
and they sell at a pretty hefty rate. And I was assuming that something like that would be, a no-brainer to be, they'll sell at higher price points, but I would think that would be a profitable thing to build. But from what you're saying here, I'm not sure they are nowadays. I'm not sure you could redo that. No.
Because of the cost of construction.
Cost of construction is so high now that it might not be doable.
They sell, but they were built a long time ago.
Right. So because they're not selling it, they're not selling for $1.5 million.
No.
It was fine.
So selling at 7 or 8.
5 to 8.
Well, they sell
And that's probably not
anywhere
doable
from
anymore.
5 to 8. But then if you were to rebuild that, if you were to build that now,
It would
then
cost
the
more than that.
cost to build it would be so much higher that you would have to sell it higher than that. And that's what the calculation
that's
was.
the
We're
problem
trying to
right
figure
there.
out whether a fair market value mix in
There's a
would
good
be
example
enough.
is right on Main Street across from the Taconic. There's a townhome kind of new development, and the units in there are like 1.4.
Yeah.
1.3, 1.4.
Yeah.
Across the Chicano
So
Hotel.
before, Yeah.
Hotel.
Yeah.
There was you could see it was like a kind of a long building that they put up, looked like it was just like
Yeah.
a regular
Couple
house, and
buildings
it's
back there.
and
And
it's
I
apartments.
think they're very nicely built.
They're very high
kind
end.
of higher end, but that's probably the answer to that kind of question, which I think is what
It's
Jeff
like the
was
stuff that Bill
pointing out.
Brunswick built. That just it couldn't be. It doesn't feel like.
And when that stuff gets entered in, there's just so many variables that become difficult to count on versus, if you sell lots to somebody and for single families, and we didn't even get into if there was a developer that wanted to buy a lot or 2 lots, and build their own duplex or something, something to that regard. Would that happen? Maybe. Should it? I mean, that's the other
Right.
piece, is it would just be kind of organic, where, you know, whoever bought the lot, in theory, would it be single family only, or would you try to contemplate something other than that?
The premise is if the town is going to put some skin in the game, and you're trying to catalyze what the market can't otherwise do. So if you just want it to be whatever the market will be, you're getting that other parts of town. You could do that, but this is an opportunity to supplement what the market's not giving you.
Jeff, could I ask, like, if you go back to the chart, the next one, which just says like 30 units or whatever, just to, and again, this is just so that when people are looking at this kind of stuff, it's less confusing. When you have price per unit in column D, can you put something like offered price or something to suggest? I want to make the distinction between
Cost of construction.
right,
So-
what it would cost to actually build it without anything, and what we're hoping to offer it for.
Yes.
Um,
Sell price.
yeah, sell price.
To put right next to that, the construction cost,
Mhm.
or the total development cost, it's
Right.
more than just construction.
Right.
Yeah, I think what we could do is, you know, here, because these were in flux and we thought we'd be modifying them, we just pasted in the table. I mean, it looks just like the calculator. We could have a cleaner, simpler summary table for the
Yeah.
public presentation. I think that's a great point. Maybe some of this can, if we can explain how it works conceptually ahead of time, we don't need to then also have columns representing every
Mhm.
step in the calculation. It can be
Yeah.
clean.
And I mean, now I've seen it a couple of times, but like if someone's just gonna see it, you wanna be able to make it as sort of instant.
And then maybe we could even put all three together in some way.
Mhm.
That's helpful here. Yeah.
But overall, it's, I think it's a great tool. I mean, it's really, really helpful because so much of this is, there's so many variables, and until you've got one variable that is solid, everything else just keeps moving around. And so it's just, this makes it a little easier to visualize and to try and figure out where we can go.
But with metrics that are established and
Mhm.
hopefully supported, this gives you something you can talk to developers about. This is what these are the parameters we're looking for. These are the metrics we're looking for. If they come to you with something that's slightly different, you can, it's an apples to apples comparison because you've got your version, and conditions will change, but you know what you're solving for.
Right.
Community's on board, the developer knows what they're getting into. So
Yep.
that's the idea.
Yeah,
Okay.
great.
So thank you.
Thank you so much. It's super helpful.
So we'll
Really appreciate it.
wrap up the presentation. I might think about an executive summary that's,
You did.
I think I did.
is it helpful to go through all of that in a public presentation? How much editing should we do to short the time, or do you think people want to see the full story?
I would say
It only took you half an
I was
hour.
gonna say, we're probably, for the public thing, it's gonna be the only thing we're gonna talk about, we're trying to fill about 90 minutes.
Yeah.
We just did that, so.
And if
So we probably could narrow it down a little bit to give a little more
we can
time
have
for
the full
questions.
presentation available ahead of time, and people, if they're really interested, they can take a look,
at it ahead
and
of time.
we don't need to then explain everything because they've had the opportunity.
If there's a way to get, either the final document or whatever it is that we're presenting.
The way you did it today, I think, was really, really pretty good.
Mhm.
The way you went through it myself.
Okay, well, we will talk.
Yeah.
I'm happy to compare notes with folks also as we wrap things up.
Yeah, no, this is, it's really great. It's turning out to be a
Very helpful.
kind of a seminal,
Exactly.
building block for really understanding, and then kind of.
Right. Seeing how it all
this-
fits together.
Yeah, exactly. And the assumptions over time can change, right? And that's where we can, as those change, you can kind of noodle the stuff. This will still be relevant for, moving forward, which is great.
Thanks a lot.
Thanks, Jeff.
Thanks, Jeff.
Was there anything else you guys only wanted to mention before we move on? I think it was very useful, and I will say it was really crazy when you see the thing that can be just changed and it
Yeah,
just
I would
pops
love
the
to play with
numbers
that
out.
spreadsheet.
That, you know, because we were looking at it, and like I said initially, the premise was there wasn't anything about selling single lots. We were just going to say, oh, the fair market value stuff will make enough of a profit that
Right.
that will be able to subsidize it, and
That just didn't
and
work.
the
It's
fair
not-
market value prices were so astonishingly high that you thought you'd have to be out of your mind to buy it.
Yeah.
You know, like these tiny little things.
Well, and I
like
think that there's a
875.
relationship with the square footage number, right? Once you get into market rate, people are gonna want larger units,
Right.
and then that just goes.
Yeah.
So then you get into
Yeah.
the, you know,
So yeah,
they have
That's
to.
why I threw out like the totally uneducated assumptions we're making, you know,
Not and
Some of these are good.
uneducated, outdated,
outdated.
right? Like we're looking at things that worked 20 years ago
Right.
but continue to work, and to recreate them now, totally different story.
yeah, like trying to build Equinox on that.
Right.
And sell at those prices.
It was a great idea at that time.
It was.
I don't know if you wanna, hop ahead to the housing, the Rapid Land housing update and get back to 181, cause there's
Oh
some
yeah,
stuff
maybe
that
that's a good idea.
So for tomorrow night, Jim had alluded to it, I think the presentation on financing options, Jim had said, you know, what are we financing? Well, we don't have the answer to that yet. So the context of the financing options presentation and discussion are just kind of the various programs, capacity of the programs, you know, from local option tax to CHIP to housing trust fundraising to grants. We're going to kind of go through all that stuff in the context of the type of resource it could be, and how it could be potentially utilized. All again in the context of it's outside, you know, resources that could help, you know, specifically, you know, with infrastructure and baseline costs associated with, you know, housing development here at Raptor Lane. So that's kind of the, you know, at a 10,000 foot level, that's kind of what that presentation is doing. The slides that you have in the packet are now old. We've updated it a couple times.
Oh, it's okay.
Yeah, we're probably
Do
gonna
you want
update
any
it.
comments or not?
Sure, yeah. Yeah, if you have, I mean, you know, there's an accounting of kind of where we are in the process, what we've done. And then it gets into some hypotheticals that, you know, let's see. It lists the market rate, profit sharing, local option tax, community, CHIP, rather, grant development agreements, which would be kind of incorporating a lot of stuff, and then sale of individual lots, which we talked about, and then fundraising, housing trust. So those are kind of the basic nuts and bolts topics that we're going to cover.
Someplace in there at the bottom, or likely some combination of these.
Yeah, so that's the idea. It's like this is probably going to be layered in, and those numbers aren't reflected in the community scale stuff yet because we don't even know what they might be
Right.
and how they might factor in.
And on the slide before that, you know, I think, you know, a key thing you have underlined here, town's vision, help provide land and infrastructure for workforce and senior housing. You know, that's a key point that's underlined. I just
Which page?
was thinking of adding
Where are
to
you?
page 5,
Page 5, just slide before.
just saying something along the lines of, you know, that, you know,
Oh yeah.
other, you know, without such support, no project will get off the ground, you know, sort of, essentially,
Right.
you know, this, you know, these are the kind of, you know, these are the kind of supports that are required to have any ability to
Create
move
this.
move a project forward.
Right, because if it could have happened already, it would have. and
Right.
it hasn't.
So just, you know, some of these things, we're so used to looking at this that we don't
Right, that we just
think of
assume.
the extra words that I think are helpful for people
Yeah, I
to.
could definitely add, on the slide before that, I attempt to encapsulate like the, you know,
No, it's a
current
good present.
market. And
It's a good presentation. It's good, well done.
I think so. What's going to change or has changed already a little bit is the market rate profit sharing
Right.
scenario. There's going to be probably only 1 or 2 slides on that instead of a couple. And the assumptions are going to be driven way down because it's just having the feedback from Jeff is critically important to our knowledge of that. So, presenting on that, it's going to be kind of scaled back and scaled down a little bit. More of it's theoretical, but whether or not it's feasible, that's another thing.
Right.
Yeah. Local option tax stuff is fairly simple and clean, which is nice. I mean, the
I
grants.
think on that again, I'm just trying to I don't know whether it makes some sense to repeat it every time. It's sort of, because that's, the local option tax, we're talking about, okay, put this in place. This is, to provide a revenue stream to allow us to, this is to support infrastructure costs through, without directly burdening the taxpayer.
Right.
Okay.
Yeah, because this again, when people are like, with CHIP, okay, well, or the local option tax, the whole idea is we have to pony something up to make the project happen,
Right.
but without upping your property taxes every year.
Without upping property taxes.
Or putting you at risk.
Yeah, putting the town at risk for a whole, like that could
Right.
be.
But they'd say local option tax, well, why are you doing the local
Offset
option
a bond,
tax? That's
yeah, to
to raise
offset a
the
bond.
money to pay for the infrastructure.
Some of the money.
Some of the
Some of
money, yeah.
Yeah, that's the
Right.
key about all of this, it's all sum.
It's
And
not
so
gonna
it's-
be one thing.
how, and trying to do as many as you can without,
Because things like grants are simple because it's like, okay, we get $1 million grant, great. But then the local option tax, it's like, why are you gonna tax us, something else? And it's like, so we can raise enough annual revenue to support a bond that will pay for the
Sure.
infrastructure.
There's many people that visit Dorset that don't live here that would,
Yep,
Right.
but
help-
people don't,
would be
can say,
offsetting
they would
that,
contribute.
yes.
but I don't think people easily we've been talking about local option tax so long, I don't think people put together those two pieces that,
Sure.
how it's being used exactly, even though you kind of go into it a bit. I think we need to handhold people.
Okay. So maybe more of a summary of
Just
the-
a.
do we not say that?
Because right here, you say
It
potential
says
bond
could cover an
estimates, and it's
annual
like,
bond payment.
so this
at the
is,
bottom,
what you're
but it's
talking
very
about is, potential bond estimates, 3.5 million, potentially raise 3.5 million to support infrastructure
So, yeah, just
without,
a couple sentences.
yeah,
Without burdening
a
tax.
couple of words, that's all.
Yep. No, I think there's definitely stuff I can put at the front end to kind of preface all of it. So the context is
Right,
the town
Because this
providing
is,
land and infrastructure.
this is hard for people who haven't been,
yeah, I know. It's,
In the
and it's
middle of
just
it
a
for a
lot,
long time.
it's hard enough when
For people
we're paying attention to it
yeah,
over and over because there's so many moving parts.
Yep.
And for someone to just all of a sudden come and listen to it and understand how it's gonna work. Particularly because they still are moving parts and they still will be moving parts for a while.
and on something like the housing trust, when you bring that up, I think, it's a good thing to bring up, but people have to recognize that, the housing trust is essentially a not-for-profit entity that's gonna be,
Would have to exist.
have
its own
a bunch
revenue
of money
stream.
and
Yeah.
have a lot of, it's gonna have to have people working on this all the time. And that's,
Yeah.
it's not like this is some magic thing, it's just, it's a lot of work.
Someone has to do it.
Sure. Yep. And there's in that slide, there's an example at the bottom of kind of the, it could do stuff, but it would be kind of a one-off.
Right, if you're just buying up one property at a time, it's a very expensive proposition.
Yeah.
Hard for the housing trust to compete.
Right,
Yep.
and you have to raise a lot of money and then just for one unit.
But that's the sort of thing people like the idea of a housing trust when it was getting into discussions. It's like, wow, isn't that cool? Wouldn't that be a good way to do it? And it's like,
Everyone loves a silver bullet.
I like the idea of a housing trust to help with down payment assistance.
Yeah, I think
that's
if
a
you
great
take away,
idea.
it can do a lot of good stuff.
yeah, if you take away town-owned land at Raptor Lane, then if you want to talk about like what can be, you know, done or incentivized, then the housing trust, to your
Right.
point, becomes a good vehicle, a good potential vehicle.
Yep.
You know, to do, you know, stuff over time. Because it would be working on
But it's again, the housing
The
trust
issue
is
of-
probably gonna do stuff where they end up, there's some risk and there's a lot of work and there's a, you know, it's a company.
Yep, and there are other partners that we didn't really talk a lot about, Cornerstone or Habitat, or there's other nonprofit partners that are around that, if you have certain parameters in your matrix of the unit type, and stuff like that, there could be parts of a project that
That we get
potentially
money for.
that they could
Yeah.
plug their stuff into.
Yep.
I think is the hope.
Right.
You know, that then you're starting to put the kind
It's like Culver
existing
Lane.
puzzle pieces together.
Culver Lane would be a really complicated thing, except somebody else does it for us, which is great.
Yeah, when that's the type, you know, the nonprofit developers, you know, one thing we didn't hit on, but you know, that there's other, his slides are important because that just shows kind of the market kind of dynamics around the asset, the sale of the lots, the creation of those types of units. It doesn't dive into, what if you had a partnership with a nonprofit that could bring money for infrastructure or money for other things that helps to, you know, kind of set the framework for it.
And all of those things, that's why you keep saying, if we adjust them, like as we find out, okay, this is an option, then we plug that in and it maybe lets us do something a little bit more than what we thought, or, you know.
But now we can, you know, if the last couple of public sessions, we've kind of boiled it down to, hey, you know, 30 to 50 units in a phase, and then maybe more after a phase. Now we've kind of taken that info and then it's showing up in that spreadsheet, and now we can actually, okay, this is what we think it would look like.
But also, I think, you know, when we were talking about, it was so hard at those, you know, sorry, just at those sessions, it was so hard for people, you know, to ask them 30 or 50 or how many. It's like, on what basis, you know? It was total gut feel. But now you start providing a little bit of info, and then it's like, if it's 30, then, you know, X% could be more affordable. So, you know, what they get an idea of the dynamics of, you know, it's not just, do you think 30 or 60 would look good in this place, but it's, you know, what can you actually, what could be financially feasible?
Yep, and then under
And
those
how many units would
pretenses
you
too,
get out of
it's
Yeah.
you're it's affordable to a higher income number is what you're doing. So
That's a big part of this.
which again gets back to the missing middle piece where we kind of have talked about where these are the type of units that just don't they don't exist, they're not available, and it's, you know, this is what.
So Dorset's going to have a very hard time doing the bottom of the income scale.
Right.
Plain and simple. But we can help the teachers or something.
Which was kind of where this all started to
Right.
begin with.
Yeah.
And that's, you know, it's like, because there've been so many variables, you sort of get off track, because it's like, oh, well, if we offer this, then we might get some money over here, and then that comes in and it kind of skews the equation. And, you know, and like I've always said, we can't solve every problem through this. So it's just trying to focus on, like, if we stick
is
to
feasible.
the missing middle, which is what we're aiming for, and then, you know, also to Rosalie's point, seniors, I was also taken by the number of households of seniors are in the lowest. And granted, it's fixed income, but still, you know, that's.
Yeah, and to Jeff's point with the size and then the design, you can make those conducive to that.
But those are the people who are also getting forced out now through increases in property taxes and stuff like that.
Exactly.
They're having to move out.
I can name 10 of them, just right off the top of my head,
right
now.
And when I think about the smart design, you know, what do you know? My own house. And they made some terrible choices. And, it could easily be 400 square feet smaller and not feel any smaller if it had been designed in a smarter way.
Make it efficient,
Good point.
use your spaces.
Exactly. Like we've got
Skip the
we've got
hallways.
spaces that are just, I don't know, what do we do with
Dead
this?
space.
Well, we put a lot of crap there at the moment. But that's, the kind of thing that someone who has the expertise could really.
Yeah, do you really need it?
Exactly. Or could this be more
It's like
efficiently used?
Make every space work
I
for you.
love this,
No,
this
no
Yes.
extra.
investment we made once upon a time, which was, these guys, they started doing hotels in major cities. What they had done before was actually cruise ships. So they made really efficient
Boat
use of
designers.
space.
Yeah.
So they had
They're
much
the best.
smaller, put a lot more hotel rooms in and people feel comfy with it.
Yeah, exactly.
The last piece that's, there's a updated,
Sort of a simplistic
Yeah.
updated
diagram of how chip works.
illustration, I would call it.
So that's the old,
The one that's on the table is the shiny
get the yellow and green ones. the
BBA
new-
colors. Yay, BBA. And meant to try to, give you all the information on one page. Brian's obviously gonna have it's a 10-page slide deck that explains in more detail, but I thought that this one pager is kind of an interesting piece that it's kind of new. It's very much in its infancy, and this schematic may change a little bit over time, but it's a helpful thing where new program, trying to get the public's kind of understanding around it and awareness of it, up to speed with everybody that's been kind of living and dying with the discussion and the new programs and stuff. And, the hope is that this is something that people could kind of follow through, look at it and go, yeah, okay. I generally have a better 10,000-foot view having looked at this one pager than
pretty good.
I did before.
Yep,
So,
yep.
So that's the other piece that'll round out this whole presentation tomorrow night. And the hope is to get through, I know at the last one, I think I said I'd get through in half an hour and I did not. I really we'll get through it and try to just fill that kind of 70 to 90 minute window with lots of chance for whatever hypothetical.
Questions and
Yeah,
stuff.
like who's paying for what? How would this work? How would that work? And for that back and forth.
And this is just gonna be a process, and then there are gonna be a lot of moving pieces, but the answer is not gonna be any one of these things. It's gonna be a combination
Combination of all of them.
of, all of them to
Yeah.
try
All or some.
and try to get to the point where we are doing exactly what Jim keeps saying, is that we're lowering the risks so that there's no risk and there's no burden, to a certain extent.
Yep. And there's certain aspects of, the infrastructure being in place, and then, from the, the hypothetical single family lot sale thing. It's a single family lot in Dorset. It's always going to have,
Yeah.
it's always going to have value.
And even if you go and do an acre lot, which is probably on the small side for Dorset, if you don't have to take up half of that with your septic system and your well,
Yeah,
an acre is much bigger than it normally is.
Right, exactly.
and that's stuff that we can ground truth through kind of the public input process and consult with the realtors and stuff like that. So hopefully it's setting it up for people to come back at the May meeting and then get this final version of all of the market study, which is going to be kind of the real, I think, actionable directive piece that we can build on.
And this was, the community scale thing is exactly what Naylor and Green had said when they had replied. They said, this is something that, like, we would
Yeah.
have to see this before.
Well, and what we're doing is it's a much deeper, broader, more detailed effort than, so it's only going to help by having such specificity. What's the last thing to?
Was there anything else?
So, yeah, then if you wanted to go over the
Okay,
Act 181.
yeah, so, yeah, we'll move to the Act 181 update.
I included so this is the slide deck that's in the board packet. It was from the League of Cities and Towns when they did their testimony in front of, I don't know if it was House or Senate, one of the committees. And, the tier 3 and the road rule are the things that are getting the press right now. And so the law was passed 2 years ago. The governor vetoed it. It got overridden. And now we're into the rulemaking phase of it, and where things become actionable. And I think July 1st was a time frame where there was going to be new rules and there was going to be new restrictions. And the rural communities, I think, throughout the state, many of which probably don't even have zoning. I don't know how many there are left, but there's some. Act 181 essentially is statewide. It's a statewide land use structure, so zoning, more or less. So then now there's kind of a hue and cry, and it seems like that there's going to be it's a 325 is the new bill to make changes to it, I think. So what's happening kind of around the state is select boards are talking about parts of Act 181, all of Act 181, whatever you want to talk about, and for the town to have a stance on it. And that's kind of what I was just giving opportunity for. It's up to the board what you want to do. But.
Yeah, so I've heard just anecdotally that there've been, you've probably read the papers, protests against it, and people coming out against it. It obviously, when you're going through this and you realize they're saying here they're trying to make this big push to make housing easier, and there's one little portion of that might be that if you're in just the right circumstances, and then they're talking about why housing is so expensive, and then they're just layering on even more regulation and permitting. It just makes no sense. It's like, why do CHIP if you're going to do this to everybody?
Well, it seems what I just saw the other day, I'm not sure when, but the person who was behind 181 and the primary person behind 181 initially, she finally put up the white flag and said, it's going to change. They've got S325 ready to push everything back and, study things. And, if you read VT Digger and all, it sounds like this is, it's definitely happening. It is. We're going to, so like the,
325 is
assuming,
definitely happening.
Yeah.
Okay.
Which, the main thing it does is push back everything. To give more time. I think is that fair?
Yeah. That's a good characterization of where we're at right now.
So I think they're going to re-examine, the road rule and all that and the tier 3 stuff, but gives an opportunity to, so where I think the BCRC was pushing us to make some decisions while we have time. I think all that timing is just kicked back.
Yeah.
Good.
I mean, I think
because I've been having a heck of a hard time figuring this out.
You should just get rid of the whole thing.
Could you figure it out?
I mean, I can't. I've probably had 30 people talk to me about this in the last 3 or 4 weeks because they're reading it or paying attention, and it's hard. And even this was really helpful.
Usually the stuff is the real brass tacks of like regulation is in rulemaking.
Right.
Like the wetland, Frank knows, the wetlands map just changed, right?
Yep.
Most people have no idea what's a wetland map. What happens when it changes? Well, guess what? There's winners and losers in that. And my only hope is that people start to wake up to our existing conditions and kind of, that's where the, kind of questioning the, A&Rs, they create a lot of rules in a vacuum. With no real economic review, no real social review, nothing.
Maps when you saw them and like the corridors and stuff, even Phil Scott ended up saying, I live off an 800-foot driveway and, there's lots of wildlife going around my driveway and stuff.
Yeah.
It's like, what are you
And
trying to,
the
what are you
genesis
trying to
of,
protect?
the genesis of some of that stuff comes from like think tank environmental
Right.
groups.
Yeah.
And that's the reality of like, you know, I
In a
hope the
bubble.
average person is able to like understand that that's where it came from. It wasn't, it was some aspirational environmental thing that just got picked up off a
People will say,
book and stuffed into.
wouldn't it be great if we could keep human beings from being in the woods, you know? Because they just mess stuff up.
Yeah.
Well, and Act 250 in general has become, even without the rule changes, their attitude towards applications
Mhm.
is
Negative.
cover, and they are saying we're going to cover our ass on everything.
Mhm.
So, for example, I'm doing a project and they're going to add 0.3 of an acre of impervious. Doesn't trigger a tender. They're going to, and I can't just say that. Let's say
gotta show it.
talk to this regulator, get an email from him that says you're correct. Do that times 15 different criteria. I mean, for the same project, Act 250 easily takes twice as much time as it did 6 years ago.
Right.
So that adds to all the cost, and then you're trying to keep things affordable.
Well, and
It's wild.
no, that's exactly right. And that's the point, is that more regulation makes things take longer and makes
Right.
things more expensive.
Yeah.
And so you can't talk about affordable housing and then say, now we're going to add in all these rules. What they should be doing is relaxing some of these rules to allow people to build and
But
to
it-
help.
But you can see it making some sense when they're doing stuff like, okay, where there's already infrastructure, it shouldn't be so hard to build.
Yes.
Yeah,
How
but we're
many
in
towns?
Vermont. We're in
Exactly.
Vermont.
In a state
We're in a
that
rural
is
state.
full of single family homes on
And what
1
was
or
that?
2
That
acres.
percentage was
And
what,
that's for-
1%?
Generations been the
Yeah,
pattern
it's
of
tiny.
development.
And I think the other thing that,
Just most of the state you can't do stuff on.
yeah,
Yeah, here it says 73%.
2.1% might be tier 1 of the entire state. And the
Right.
other thing is that they're saying, and this was really helpful, because I've been trying to, I couldn't connect my head on it, connect the dots, was that, oh, tier 2 is going to stay the same as what's currently there. But that's not true. And I was looking at the map, and I don't know that Dorset has anything quite like this, but
This corridor thing.
this corridor,
Yeah.
which means it's a habitat connector. That, if you're going north out of town, you take a left, go to West Rupert, that whole stretch is a corridor. Perfect place to build some homes. But now you wouldn't need a 250 permit there, and now this will drag it in.
Right.
So yes, it's tier 2, but now it's under Act 250 and it wasn't before. And
It's a good example. And
you
there's
know,
probably
along all
Okay.
our 1137A, tons of areas have been mapped as these corridors, which doesn't make sense, but it's just going to drag more in. Forgetting all the tier 3 and 8,
That's
the
not
road-
even getting into the road.
not even getting into
Yeah.
tier 3, just regular, the areas that say we're leaving the same, that's just not true.
I mean, honestly, that's why I say, I think we should just write a letter and say this whole thing should be repealed, because all you're going to do is drive up the cost of housing and building.
Yeah, I mean,
Yeah, because I liked this slide as well, where it says 73% of the population, all the municipalities, the population is under 2,500, and most of them governed by volunteers.
Yep.
Yep.
200 have an adopted municipal.
Most are people in
plan.
single families with
Yeah.
acreage.
Only 43 municipalities operate water and sewer of the 251 municipalities.
right,
Just not, but
So,
But that's what
what's
drives
the
me nuts,
point of
actually. I
Act
couldn't-
181?
up in Montpelier, all these guys, they saw it on the basis of, well, we'll make it easier where it makes sense. And then we'll make sure we protect it where it's important.
Well, they
they're
need
the
to drive
arbiters.
around the state
And
and
that's
see
their
what's.
spiel. It just doesn't turn into that in
doesn't hold
reality.
water.
Doesn't.
That's because they're imagining they're in one of the few places where there is water and sewer. And it doesn't occur
Right,
to
and
them.
it
They,
doesn't
they
occur
need
to
to
them.
drive around to these towns and see what's actually out here.
Well, in theory, if 73% of the population is in that situation, then most of our legislators
Should
in
be.
that situation
Yeah.
too. So,
Right, in theory.
just saying.
But they have different priorities.
Well,
Right.
if we're looking, I agree with Megan, if you're looking for input from the board, mine would be also to get rid of Act 181 entirely. Or keep the part where it's easier to develop in downtowns that have it, but
It just
These changes
no
to tier-
expansion to 250 after.
yeah, but the changes to tier 2 and 3, no.
I'll go along with that.
I would leave it just the way it is.
So moved.
We can work to
Draft
draft
something,
something, yeah.
yep.
What, you have a time frame?
I mean, just, it's being actively debated and talked about now, so just another, we can send it to our legislative representatives, Senate and House.
Yep.
And just make it known.
Yeah.
And like I said, it's happening, like every town is it's on the agenda of every select board in the last month or so. So I just want to give space to it.
Yeah, and what I hate to see is when things like this happen and they enact a law that's really bad, then instead of repealing it or just eliminating parts of it entirely, they just put
How
another
do we
law
tweak
in on
it? How do
top
we
that makes
tweak
it even more complicated. It's just
Yeah.
remove the
Absolutely.
initial one.
Remove it, start all over.
Yeah, and in
Or
the
don't.
regulation stuff, we have our own pretty stringent regulations. We don't even know, with some of the hypotheticals of what we just talked about, with selling the lots at 1 acre and all this other stuff, all of that has to jive with our zoning regulations, our own zoning regulations. So we have to, reflect on whatever it is that we put it through the spreadsheet. We have to reflect on, could you do that? Could you build something like that? Could you permit it?
He hadn't done any analysis of the property to see if even 12 or 14 or 16.
No, that would be kind of a next phase that hopefully VAA can kind of opine on a little bit and give us some of that.
Right. Where could you put
Some of those
these
assumptions
1
that
acre
are
lots?
baked into that spreadsheet. What would that look like on paper? And he showed the thing in Middlebury, but something similar to that, where the stuff would be here, and then there would be maybe the single families are a little further out. But when this goes to get re-subdivided, it's got to go through PUD design, and there's a whole bunch of processes to go through there. Whoever is going to start to do conceptual design is going to have to run that through.
Have to change the
Okay.
bylaw.
Again,
Um,
don't tell gay.
All right, so we've got one liquor license. Are you ready to get onto that, or did you have
Yep.
something else? So do we have a motion to
Go
recess
out
and
of recess,
So moved?
go into the
go into
liquor
the
board
Board of
authority?
Liquor,
Liquor board
I'll
authority.
second.
something like that.
Okay, we had a motion, we had a second,
Yep.
all in favor, say aye.
And the liquor license is a second class from Meadowy Mint.
I'll make a motion to approve.
Second. All in favor, say aye.
Aye.
And that's the only one, right?
Mhm.
Okay, then we will now go back into open meeting. The paving bid.
Yep, in the packet, you can read my chicken scratch, low bid for the paving, Fuller Sand and Gravel, $88 a ton, quite a bit less than anybody else, which is great.
Nice.
And no reason not to go with them. They did the paving last year.
I look back at last year's bids and they were very similar. As far as who was.
Yep. I think there might have been one or two lower, maybe one other vendor that was a little lower than this set, but yeah.
Yeah.
But it's one of the only things, we got 5 bids, which is great.
Yep, makes perfect sense.
Well, I'm happy to make a motion that we work with Fuller Sand and Gravel.
Second,
Second.
all in favor, say aye.
Aye.
No. Oh, hazard
Yep,
mitigation.
the next, so we've got a proposal from the BCRC to help us rewrite the hazard mitigation plan, which is, if you remember, it's required by FEMA
Right.
in order to, get reimbursed in any FEMA event. And then it also makes certain pots of money available, like the Chanticleer buyout was part of that program. And FEMA has a lot of new requirements, so it gets to be where the document itself kind of has to get restructured, and it's best to use a planning entity to do that. Biggest thing is they being BCRC. There's an overall cost estimate of 15,962, but it's on the very next, piece, billing and town responsibility. BCRC agrees to pay 50% of the costs of the project, $8,000 through in-kind donations of hours, so that you get that 15 is really 15 minus 8,
yeah.
so it's 7 and change, which falls within our ability to fund it, which is good.
Yeah, I was gonna say, it sounds pretty pricey.
Yeah, so with that cost structure, we've got funding within the highway budget for engineering that will cover this.
Okay.
Rob, are there any potential issues? It's gonna lapse for a while. Is there any issue with that?
I don't think so, because we don't have anything pending. Is typically with FEMA, as long as you can show that you're reapplying, you're rewriting the thing and you're going to update it,
Okay.
or that you're in the process of updating it, that you wouldn't be precluded from certain things.
Cool.
Worst case, it would be a portion of a cost share that they may say that we're not eligible to receive, but you could appeal it.
I move we accept the proposal from BCRC.
I'll second.
All in
For
favor,
this
say
project.
aye.
I
And the biggest thing is that FEMA is, it may not look the same in 6 months. I mean, it's just, so the funding sources that normally the state would provide the money to do this through their program, and that money's gone. So now we're lucky that we're sitting in a situation where we have some money to pay for it. But that's just a good example of, there's not a lot of funding out there for mitigation stuff.
Okay. Old business.
Yep. We continue to kind of beat our heads against the wall with VTrans and MSK, and it's maybe not the right way to phrase it. VTrans, the VTrans, it's the kind of planning staff that we're talking with, and they're being very helpful in just trying to figure out a way to is there funding? What type of funding? Probably not. How would this be viewed from the maintenance division? And just kind of kicking tires on that that conceptual plan and idea for the path.
Mm-hmm.
And I'm not sure what where it's going to end up. It could be that that we come back with it's either a sidewalk or it's not a sidewalk, it's not a path, it's more of the road diet type of thing, and with curbing and trees and some other stuff maybe. So it may evolve over time, but the good news is we're getting to VTrans, I think, at an early juncture. There's nothing planned right away, and we'll continue to kind of massage that and see where it leads us. What else is there to talk about? I haven't talked about. The 112 Mad Tom, we've gotten most of the topsoil down. It's got to get finish graded, and then hopefully we'll get seed and mulch in the next week or two.
It's starting to look nice.
Yeah, the topsoil is a little wet, so it's going to have to dry out.
Yeah.
But hopefully within warmer weather comes, and within a few weeks we'll get the seed mulch down, and it'll start to grow grass, which will be great. And the little committee they do have I think an outline on a kind of a gazebo pavilion structure that's very handsome. So hopefully, and we've got some cost estimates for the materials package. So we're moving along.
Nice.
The Route 30, the traffic committee meeting, I think I mentioned this at the last, or maybe I didn't, but it was supposed to be April 8th. It's been delayed till May 13th. And that's where we're asking for the no parking extension on the south side of the quarry on Route 30. And then we're asking to push the 35-mile-an-hour speed zone down to the town shed, H.M. Williams area.
Mm-hmm.
Right now, it's closer to like Fox Lane. It's going to go from Fox Lane down to like Lane Road almost, which will capture H.N. Williams, the farmers market, all that other stuff with lower traffic speeds. With the BCA appeal, we're in the process of finalizing an appraisal, and then starting, I think what'll be a negotiation, the first round of a negotiation on a new value. And I can send in kind of an email up to the board probably next week. I'll have some more detailed info for that soon.
Can you say what the appraisal came in?
I can say that it's not complete yet because there's new and different information. There's always new information to take in. So there's a potential sale that I think is a comp that we're going to try to get factored in, and it's at a level where comps are hard to find. So it's so if it is a comp and it can be factored into the appraisal, then it could change the number. I think on the higher side.
Yep.
Yeah, and then on the habitat concept on Route 30, we're still waiting kind of the site plan to figure out, where on the property there could be feasible space for water. Yeah, for well and septic, and then that's going to drive what is possible from a unit count standpoint.
How big is that lot?
It's 8 acres. Wow. But again, when you're talking
It
about
doesn't look like
when
it.
you're talking about
So
today's, it's kind of skinny and it's triangular shaped. But there's definitely like probably 2 to 4 acre space south of the parking lot. That's
Possible.
part of it's wooded, but we'll see how much is scavenged by other pre-existing conditions, and that's you go back to the layers of regulation and rules and stuff,
Right.
and now isolation distances and all this other stuff, riparian setbacks,
River corridors.
river corridor stuff. And while we're actually on that river corridor stuff, it seems like right at the last planning meeting, so I was there, the BCRC was talking about the state encouraging towns to include the river corridor language in their bylaw, but it sounded like if you don't, the state's going to do it on their own and have their own. It'll be part of what the stream alteration or the stream engineers do. So it sounds like they're going to have their own standalone corridor restrictions by 2028. And the reason and our planning commission, I think, is reluctant to include river corridor language in the bylaw because it's really hard to understand. The impacts will be so individualized from property owner to property owner. There's going to be no easy way to really fully understand like negative, positive, whatever the impacts are. But it sounds like the state's going to just kind of soldier on and have its own standalone corridor regulation, I guess. Yeah. So it's something to think about. I mean, for us, it's not. It's typically we're headwaters, so as the river gets bigger, the corridor generally gets bigger. Like in East Dorset, where there's the kind of alluvial fan thing, the corridor becomes a larger swath of land that it encompasses. But it's important that it's going to be a new thing for people to interact with. So if you have an existing property with structures and stuff, it's important to understand how that would be impacted. But it's also important to understand about undeveloped lots and stuff that has the potential to be have something happen that maybe won't have something happen, and that's the question that's hard to answer at scale.
It'll eat up a lot of land.
So,
But those corridors move too.
They do. That's the whole idea.
yeah, but you would have to prove prove that it's not there, or that it's it's like a wetland delineation. If it's there on a map, you would have to if it's If it's not, if you can disprove it on the ground, you would have to do that. So it's you know, it's another kind of layer of things. We don't, you know, there's other communities that have adopted it. We never have.
Well, they don't have enough stuff to do right now,
Yeah,
do they?
one more step towards affordability.
Yeah, exactly.
Yeah, no, it's again it's counterintuitive that, you know, all your
Come up with a new way to make your lives difficult.
yes. Well, when historic patterns of development were on and near rivers for industrial purposes, and that's where most people live.
Right.
To then go, well, the river, you can't be anywhere near the river. It's kind of you're kind of short circuiting the whole
Right.
system. Yeah. So that's it for old and new business.
Okay. So finance.
So the delinquent tax number wasn't updated, but it hasn't changed much. It's in that $40,000 range. And let's see. It'd actually be higher than that because there's new delinquencies. But the old stuff is in that $40,000 range. As far as FY26, we're seeing some winter, highway items that are over budget. And some other stuff that's kind of a little bit under budget or right at par. And then I've got an updated accounting of the kind of ARPA fund balances where we're sitting. I think we finally just got an invoice from Enman that we can factor into this whole thing.
So when you're saying 148 available for use, but does not include these last two things.
Right. Correct.
So that kind of.
It kind of
We're
captures.
pretty much done.
Not much left.
It captures
We're
that.
pretty much done, yeah.
Correct.
Tank of gas.
Yep. So depending on certain aspects of it, like the Mad Tom site or the solar work, if that stuff comes in under,
Mhm.
then
There might be something.
then
like
there
that.
might be something left. But yeah, for all intents and purposes, the stuff's been allocated,
Mhm.
which is good because we've followed all the treasury rules. We've done everything we've supposed to do. We've actually closed all that stuff out, but there's still you're supposed to spend it by the end of 26 kind of
Mhm.
tone to the whole thing. Yeah, and that paving bid is actually a little bit under budget, which is good.
Mhm.
Not enough to do any more paving, but enough to help with next year.
For the market study, will they provide any kind of residual support for that? Because I could just see in a year if we say, can you update this or that, or we've got new figures.
Pretty sure
Right.
for just an hourly rate that they would continue to tweak the thing for
Okay.
us. I've been very impressed with
Yeah.
the quality of the work, and I think there's probably going to be definitely situations for, like to your point, Frank, where we will want.
Run different scenarios.
Yeah, that's what I'm
Things will
thinking.
change.
I mean, we've got the bulk of it done, but to
Yep.
be able to tweak it as we go
Right.
forward.
I mean, hopefully we'll start getting some of these questions answered here and there, and
Yeah,
then we can
yeah.
adjust.
That's it for finance.
Okay, do I have a motion?
Motion to approve?
Second?
All in favor, say aye.
Aye.
Is there anything left on this one? Town manager's report.
Just maybe the update on the infrastructure. So we did have a site visit with VIA for that kind of conceptual
Yeah.
design piece. The market study is going to have some parameters that I think VIA is going to be able to use, which will be great. And then as far as the E&K and the well work, we are supposed to send out source permit application stuff, I think next week. And the way that works is it goes out to all abutters. In this case, the 166 acre parcel that's up the hill is the kind of mother parcel for the site. So it's the abutters to that parcel that get notified. And as that works out, most of the abutting land to the west is town owned stuff. So there's probably about 10 or 11, I think, abutters that will get a notice. We have a cover letter that that we're going to put in that whole packet because they actually have to get a copy of the application and everything, and we're going to put a cover letter on it that kind of says, here's why you're getting this, here's what we're doing. I think most people it's top of mind already, but it'll kind of go along with that. And then once that goes out, then we can start to build the road, get the drill rig up there, and find water. And that's the short way to explain a really long, complicated process. So hopefully, I think we're still on the time schedule that Enman had put out there. I don't think that we've deviated from that yet, which is good. Which means by the end of the summer, we should have more really good information, and then we can start to make some assumptions, but then they can start to dig down into some of those more detailed infrastructure numbers, where we can start to know, okay, here's the here's part of the infrastructure number. So that's it.
Okay, perfect. Pass those over. I think I already signed these.
Other
so-
business.
Oh, is there other business?
I had spoken with Cindy Loudon's lawyer about, she expressed some interest in being on the housing committee. So,
Good by me.
Because she was on the initial housing committee for Raptor Lane way back when we did all those. So I think that sounds great. So we just add her on.
She's made some pretty thoughtful comments at our hearings that I think she's a good voice.
I need a motion on that.
To appoint, we can make a motion. Frank
Well,
just
let's
made a
see.
motion.
Can't you just appoint? I think the chair can just appoint, well, I don't know. No, Frank made motion, I'll second.
Yeah, we'll just go with a motion.
Yeah, no.
All in favor, say aye.
Aye.
Unless
Aye.
we've got it. I'm never sure.
No, that's right.
You coming down?
Robert's rules that
Honestly,
Can't hurt to
my
appoint.
throat was a little scratchy the other day and I'm losing my voice, but I was at the doctor yesterday and I'm like, do I have strep? No. Do I have anything? No. There's no inflammation, there's no nothing. I'm
Get rid of the
like,
allergies.
yeah, could be, but
Well, you put your coat on, I thought maybe you were feeling chilled.
I was feeling chilled.
Uh-oh.
But I don't have a fever. I know that. Don't worry. I never get very sick.
Oh, good.
Knock on wood.
Yeah.
All right, did I hear a motion to adjourn?
Yeah. So moved.
I'll second.
All in favor, say aye. Aye.